Time now for some fresh generative AI data and insight from Fred. Here to help us interpret it is our chief equity strategist and economist, John Blank. To put this in context, John, for those who don't know, who or what is Fred?
Fred is the Federal Reserve Economic Database. So it's run out of the St. Louis Fed, and it was put up a few years ago, which gives us all of the public data, publicly that the Federal Reserve System collects for us, and they collect in a very dynamic way, Terry, things that are going on in the economy. So they started to collect recently, a couple months ago, generative AI adoption rates and time savings because they themselves are very interested in trying to quantify the macroeconomic benefits or the lack thereof of generative AI investment.
Okay, so what exactly is the new data?
Well, we've got this is the generative AI adoption rates, which is they're studying sector by sector the amount of workers that are actually using it. For example, knowledge-based and digital-heavy sectors like computer and math, finance, or in architecture are at 70% use, whereas you get people out in the public sector can be around 10%, maybe 20%. So there's a very big divide right now between the knowledge and digital sectors, computer and math, financial and insurance, management, architecture, and engineering, and the rest of the economy, in who is using and applying it. But it's definitely the case that the knowledge sector is applying it. The other thing was we're learning, Terry, is the adoption rates are great, but the actual time savings is going up from 1.4% a year ago to 2.1% now. And again, this is higher for, say, architecture and engineering, which is at 3.2%. And, enterprises that use it in management, that is at 4.2% too. So again, when you have 4.2% savings going on in a very, modest sized part of the economy, that's going to translate into 2% savings in time hours across the economy. So again, we're looking at a massive multi-trillion-dollar spending move, and we're getting a 2% improvement in time hours, which is nothing.
So, what does it mean for investors?
It means we need to be very cautious because the return on invested capital that is, prefacing all these big chip investments in data farms and all these IPOs and Anthropic and SpaceX and ChatGPT and other places is all bet on that there's a huge amount of downstream return on capital coming from the use of generative AI, and it's not materializing the data at this point, Terry.
You raised a good question in your writing recently as it pertains to our economy, and that is, what has this massive AI effort actually achieved economically, especially in a positive way?
Well, this is the thing we would not yet to see, Terry. I mean, the bulls are going to tell you that products and real achievements are downstream from this immediate moment. So it all depends on your perspective. If you think October, November 2022 was only 4 years ago and they don't have enough time to show for themselves what the real value is here, or if you are, more bearish, you can say 4 years is plenty of time and this is what we got.
In which sectors or industries has all of this had the greatest impact?
Like we spoke about, it is the knowledge sectors, the computer and math, and actually finance and insurance has also played a fairly big uptake. And this is also happening. What I would tell you is the legal sector may be the next area where there's a lot of volatility in use or non-use in the legal sector. That's the next one to watch out for.
Does all of this that we've talked about justify the multi-trillion-dollar investment that's been made into it?
It's a bull-bear case, Terry. My personal view is no, it does not. And the reason I think that is I think generative AI is here to stay across the economy, particularly in these knowledge sectors. But the manner in which it is applied and the chips that are involved and the way it goes forward, I personally think will change dramatically from where we are right now.
So what are the key takeaways from all of this that we should be aware of, especially in terms of risk?
Yeah, that we're in a bubble, Terry, AI bubble, and that this is, it can push these stocks up for another year or two, but it also can blow up in your face. So be very careful with AI investment.
Here are three more large cap stocks of interest: B1 Medicines, it's an ADR, Celestica, and Archer Daniels Midland.
Yeah, B1 Medicines is an oncology company. It discovers and develops treatments for cancer patients. There's a cancer producer. We've got it's $10 a share in earnings this year, $15 a share next year. Really impressive growth rate, Terry. We've also got a $375 share price. But this is a stock you may want to know about. There's a lot of analyst coverage, and it's really ramped up since 2024. It must be a real strong player in that oncology space for cancer. And keep aware, we also get the mRNA stories out there with Moderna on cancer improvements. So there's clearly some evidence here of a massive improvement in cancer research.
Celestica.
Celestica is one of the largest, if not the largest, electronic manufacturing service company. So in the AI boom, a lot of people are just outsourcing the services to build their data centers to groups like Celestica. So ticker CLS is now, I'm looking at a $310 share price. You could have bought this for $50 a share in 2024. So again, massive upsurge, but really, really clear there might be a blow off top in a stock like this.
And Archer Daniels Midland.
Archer Daniels Midland is one of the leading producers of food and beverage products, ingredients, I should say, from a variety of agricultural products. So this is like a Cargill competitor. And again, it sunk pretty dramatically down to $50 a share in 2025. It's back up to $90 a share now, or $80 a share with a $90 share price target. And again, we're seeing a lot of momentum in these ag ingredient names because of the push to increase prices from the Strait of Hormuz situation. So take a look at ticker ADM. It looks like a good momentum trade right now, and the PE ratio is only 15.
Our chief equity strategist and economist, John Blank, with Generative AI Insights. And with John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.